Thank you very much for joining us. Welcome back. We are discussing working capital, and this is our fourth lecture on working capital. And we are discussing today over capitalization and over trading. If I'm going to discuss what is the level of working capital, I can classify the working capital in three different categories. I can say this is the optimum level of working capital, over capitalization or under capitalization, which is called over trading as well. In the optimum level of working capital, there is a sufficient working capital. Inventories are at the optimum level, receivable are at the optimum level, minimum cash is being maintained to meet the contingencies, and account payables are also at the optimum level. So we can say in the optimum level of working capital, inventories turnovers are as per industry standards, account receivable collection period is as per industry standards, amount has not been stocked, amount has not been tied up in the working capital, and there is no shortage of working capital that the company will not be able to meet its short-term obligations. So this is optimum, not too much, not too low, sufficient level of working capital is there to meet the requirement of the business. So this is called efficient management of working capital. While in case of over-capitalization, the word itself reflects there is excessive working capital, means excessive inventories, account receivable and cash. In the over-capitalization, inventories turnover will be too low, debtor collection period will be too high, company is not managing working capital properly, so we can say this is inefficient management of working capital. And the third level of working capital is under-capitalizations or over trading, means company is trying to do too much with the too little capital. This usually happens when there is a sharp increase in the production, sharp increase in the sales. Might be company will be earning profit, but the working capital will not be sufficient to meet the short-term obligations. So company, there are chances that the company can go into the cash crunch. So we can say this is also called the inefficient management of working capital. Over trading is a bit tricky, and we will try to understand through this illustration. This is one situation: non-current assets having a value of 1000, net working capital is 250, and total assets are 1250. In the same way, total liabilities are 1250. Now the management has decided to double the sales. When the management has decided to double the sales, definitely production will be double as well, and the almost same amount will be required to be invested in the non-current assets to make the production double. And management has decided to finance these non-current assets by taking long-term loans. So the value of total liabilities is 2250, and total non-current assets are 2000. When my sales has been increased by 2 times, production has gone up by 2 times, definitely my raw material will increase proportionately, work in process will increase proportionately, finished goods will increase proportionately, even account payable will increase proportionately. So if all these numbers will increase and these are the certain numbers, so the balancing is 50, which is overdraft, means this 100 which was reflecting in the balance sheet before making the production double, this 100 has become 0 and company has gone into overdraft. Company has not sufficient funds to meet its short-term obligations. This is called over trading, and we have already decided this over trading will be sharp increase in the production, sharp increase in the sales. Might be company will be earning profit, but the company will be in liquidity problems. Company will not have sufficient funds to meet the short-term obligations. So what is the solution to manage it properly? So the company will be required to invest some amount in the working capital as well. So company will be required to invest some amount in the cash as well. In the third scenario, rest of the everything is constant except company has invested 250 in the working capital as well. Company has taken total loan of long-term loan of 1250. Out of this, 1000 has been invested in the non-current assets, 250 has been invested in the working capital. Now in this situation we can say the company's operation will keep working very smoothly, sales will become double, production will become double, everything will increase proportionately, and there will not be any distress. Thank you very much for joining us.